Hello and good morning, and thank you for joining us. I'm Emma Penny. I'm Managing Director of Feedinfo and agrimoney.com, and I am chairing today's discussion. So I'm delighted you've come to join us as part of our series of talks and snapshot talks that we're doing as part of Euretier Week. These are talks of 10 to 15 minutes every day, and today we are going to be looking at ag commodities. Tomorrow morning's live snapshot will be looking at what is happening in China, specifically in the feed additives market, and that will be with our senior analyst, Yuki Wong. During all of these snapshot talks, we're happy to take questions and for you to email questions through to us, which we'll make sure we answer. And I know that today's speaker is also happy to take questions as we go along. So today I'm joined by Mike Verdon, who is the founder and editor-in-chief of agrimoney.com. This is a subscription news and analysis service covering agricultural commodities markets. Now, AgriMoney takes an independent view of the commodities markets, giving anyone in the sector a fast, thorough and comprehensive view of what is happening globally across major ag commodities. Now, Mike is a very busy man, as you can imagine. There's a lot happening. So, Mike, I think the last 12 months and specifically the last quarter have been really, really busy for you. Can you give us an overview of what you've been seeing?
Yeah, well, it's been busy for of course for everyone in grain markets, and I suppose perhaps one date to trace us back to is the lows we saw in the pandemic in March. Remember when everything was tanking, whether it was shares, whether it was metals, whether it was agricultural commodities, they're all going one way south. Bonds prices obviously doing better, and if we take it from there, from March things bottomed out and they recovered, which was perhaps not a surprise, but then they've kept on recovering and gone up to 2-year highs, 3-year highs. And now corn and soybeans, for instance, are at kind of 7-year highs, or close to anyway. And that's in Chicago. Canola's hit its highest in longer than that, 12 years or something. And wheat prices in Europe are at multi-years highs too. It's been quite remarkable and something that didn't look on at all on the cards 11 months ago.
Has it been something that's really surprised you?
Yeah, yes and no. Yes, I think we were quite early on the grains, but with wheat rather than with corn or soybeans, which have seen the biggest rises. We did note even in, I was just looking back in our archives actually, even in May and June, we were warning people that the wheat balance wasn't actually quite as strong as had been thought. There was a lot of wheat in the world, but it is in China and India. And that it really isn't available to the world market, and so has less of an influence on price. In fact, only influences kind of if they need to import, which China is doing massively. So in exporter countries, after a disappointing European harvest, for instance, there wasn't as much as had been thought, and after US producers kind of putting in their lowest winter wheat sowings for the 2020 harvest in more than a century. So we did warn about wheat, but the corn and the soybeans, that was a bit of a surprise. And August or so, it was looking pretty rosy as far as corn and soybeans supplies were going.
Okay, so let's talk about some of these markets. Let's talk specifically about some of these markets. Let's start with wheat. Just talk us through sort of what you've seen in the last 12 months and sort of how things have been and the things people should be, perhaps be looking out for as well.
Well, wheat really, people should be looking out for what happens in the corn market because it's following a bit. But wheat, yes, we had this situation where there was kind of a lot, but in China and India, and that hasn't really changed so much. So wheat prices deserve to be higher than where they were, but they've been dragged up this extra amount by the high prices of alternative grains, and particularly we're talking here corn as in maize, and the high maize price is then thinking people are trying to look for alternatives, and of course the demand then spills over into wheat and drags prices of that higher too. And there's a premium in Chicago in October. The premium of wheat over corn was say $2.50 a bushel. It's now about $1. that just shows what the market is telling us. It's saying, look, if you've got demand, switch it to wheat rather than corn if you can. From just to stick with wheat, on its own merits, as it were, there were some problems in the autumn with the sowings in Russia and the US. It was dry in both those countries, which set the crop up badly for the winter. In fact, the winter hasn't yet been particularly nasty, so we're not too worried. But it doesn't look like we're going to have a great Russian harvest next year. And that's also, another little kind of nuance on this is the Russian export ban, let's take that back. The Russian export tax, which is being introduced, that is going to, in cutting returns to producers, because it'll lower the wheat price in Russia, is likely to mean there's less in the way of spring wheat sowings in Russia, which could, I'm quoting Silvercon here, I think about 1.5 to 2 million tons perhaps less wheat this year than we thought. And for next year, if this tax proves punitive, we could be talking a lot bigger kind of chunk off the potential harvest than that.
This is quite a worry then for the wheat harvest and anybody who's depending on wheat.
Well, okay. It's I wouldn't say it's a real mega worry. Europe should have a far better harvest this year, for instance. Mm-hmm. Australia's just had a bumper harvest. There is a bit of it around, but if we get any setbacks in spring, for instance, then yes, you need to start thinking about stuff. And I would always recommend people take some coverage well ahead, whether buying or selling for that matter. Just don't bank on what you see now. Just don't take 2 points and think they're going to keep on going in a straight line. That's not the way it happens. I don't think. I think wheat is, as they say, is a follower in the market of the corn and less so the soybean.
So I should have started by asking you about the corn, really. So
well,
let's talk about
in a sense. But yeah, well, corn. I think we'll take the story. As I mentioned, we were in August and things were looking pretty rosy. The US looked like it's going to have a strong harvest, and there seemed to be kind of plenty around in Brazil. But there's been a massive turnaround in the last 6 months from that picture, and it's got some figures here which I was looking at. US corn production was in August expected to be 388 million tons. It's in fact been 28 million tons less than that. Exports have been 10 million tons more at 66 million tons. This is the estimates for 2021 as ends this August. And the US corn stocks, which the USDA was expecting in August to end at 70 million tons, they're actually now predicted to end at 38.2 million tons. So you can see that's a massive reversal in fortunes. 38.2 million tons is the lowest we've had in years, and compared to consumption, to the stocks to use ratio, which is a particularly important price discovery tool because it compares how much supplies there are to how much demand there is. It's even tighter still. So yeah, no, that has been a massive turnaround.
What are the implications of this?
Well, the implications of higher prices. Perhaps if if we could go back a second, just talk about kind of why it's happened. Is one, the sowings in spring weren't as great as they thought, so the sowings estimate was lower. And in August, in fact, the USDA's Wall Street report that month came out just after there'd been this so-called derecho storm, which cut through a swathe of Iowa and Illinois, which are the two biggest corn-producing states in the US, and that cost quite a lot too. The yields weren't as great as people thought, and so all of a sudden you have this disappointing harvest. Meanwhile, another statistic just to throw at you is the Chinese demand, which has just gone through the roof. Again, in August, the USDA was predicting 7.0 million tons in Chinese corn imports. In their latest prediction, as of Tuesday, was 24 million tons. And that is again made a massive difference to the market, because not only have you had less in the way of supply coming from the US, which is the big supplier at this time of year, But there's been this huge extra demand from China too, which has just swallowed up so much resources.
And what's driving that demand from China?
This is the multi-billion-dollar question. China's ag statistics lack of are a big problem for the world ag markets. I mean, I'll stop there, but it's farmers need signals as to how much they need to plant, and this comes from ag statistics ultimately as these affect the market. But the big thing that's quoted is the recovery in the country's swine herd from African swine fever, and you could say, well, look, hey, the hogs were here, 3 or 4 years ago. Then they had the dip, and now they're coming back in. Why do they need so many more imports of corn now, more than they did then? And the difference is that the herd's being rebuilt in kind of plush, modern, spanking new kind of hog farms, which have kind of massive thousands of heads each, which use proper feed rather than being in backyards where people were just feeding their food scraps, and with the higher risk of disease that came with that, with these not being kept in kind of modern surroundings. So that's one reason. And then there's also been China's trying to increase its ethanol program, and there's been a lot more industrial demand too. And these things have weakened China's stocks significantly over the last 5 years, 6 years, from when it had a massive amount of stocks to, well, we don't really know, but certainly a lot less. And there's a bit of a debate going on in the market at the moment. The United Nations FAO last week cut its estimate for Chinese stocks by more than 50 million tons to, off the top of my head, I think it was 139 million tons. The USDA has its estimate for Chinese stocks at 196 million tons, if I remember right. So that's a massive gap, which again has huge market implications as to what that means. Is China taking this corn and stockpiling it? Is it just kind of trying to meet its phase one trade deal kind of it's obviously failed, but it's trying its best, as it were, to meet its commitments to the US, stockpiling corn to help itself out of a problem and give itself more stocks, or has it indeed is it slightly running on empty? Was the harvest last year significantly less large than the 260 million tons that's been presented, which again a lot of people seem to think is likely. The only real accurate sign we have coming from China is the corn price on the Dalian, which has been plumping around kind of record highs. It's come off a bit, but it's still elevated, which would seem to indicate there's an issue there anyway with supply still.
Okay. What about soy?
Soybeans, it's kind of the same issue as with corn, in that the US harvest has proven for last year proved significantly lower than anyone kind of had been expected, and I have got the figures here somewhere as to how much. But again, the US stocks, which the USDA had in August expected to end this season at 16.6 million tons, it's now saying 3.3 million tons. It's running on empty. Basically, that is as low as you're going to get. It's so-called pipeline supplies, because production was significantly less than expected, and export demand has been larger than forecast too. We've had Argentina's crop has already been significantly downgraded, Brazil less so. That's which of course then brings us as to what's going to happen next.
Well, what is going to happen next?
Well, okay, yeah, prices have risen significantly to try and choke off some of these demand that we've seen evident in the rundown in corn and soybean stocks in particular. This is what the prices are trying to say. Look, switch your demand to wheat if you can, or to other oil seeds, which is more difficult. As we see, canola prices have gone through the roof. But they're also trying to encourage sowings to fill the production needs ahead, and this is what's there's all eyes at the moment are on, or now after the positive report on Tuesday, and now on what's happening in the US sowings, and also in Brazil, where the corn crop is being planted at the moment. This is the safrinha crop, which actually means little harvest, but it's the big harvest. And which follows on from the soybean harvest, which is also in train at the moment. And it's early days to know what's going to happen in the soybean harvest. Brazil is the biggest soybean exporter, so remember, this is really important. This is the time of year when they take over exports. This harvest has been delayed by a dry sowing season, which meant that farmers put off their plantings, and then now when they want to harvest, it's turning out wet. So that is having this kind of double dose of delay, which is again worsening the drain on the US supplies, because people who want soybeans are having to go to US rather than Brazil, as they normally would kind of start doing it this time of year. And anyway, and this in turn is then meaning that the safrinha crop, which is planted on the same land as the soybeans harvested off, as safrinha cotton too. There are other safrinha crops, but corn's the main one, and that's being delayed. And this again has implications for the future, and is one reason why prices won't they may go a bit lower, but they're not going to get anywhere near where we saw last year. They're not going to go down too much, because there's this huge risk of what's going to happen to the Brazilian safrinha corn crop over the next couple of months. I'll just explain that in a bit more detail, because this ideal sowings window closes in a couple of weeks for safrinha corn, and there's in Mato Grosso, the top producing state, I think there was 8% planted or something like that as of Friday. Say maybe it's 15 now, who knows? But the chance of them getting 100% in the ideal sowing window is pretty much zilch. And what happens then is if you plant them late, it's fine. It's not a problem initially, but you then begin to run up with kind of the Mato Grosso dry season roulette, or in further south, kind of frost can be the problem. And if the dry season in Mato Grosso or frosts in Paraná prove severe, worse than expected, or even normal perhaps, then late planted crop can really suffer badly, and then we're on to the next cycle of shortness in the world market.
Okay, and I think on the weather side of things, is there some La Nina effect as well going? Well,
La Nina was linked to this dryness that we saw in Brazil in the autumn, in the northern hemisphere autumn. Obviously, we're talking here. Was linked to the dryness there, which slowed these sowings down, and it also, as a matter of fact, has affected the cane crop in Brazil and the coffee crop too. So for 2021, we're expecting kind of far lower output of both of those, particularly coffee as well. But La Nina, the good side for La Nina is Australia has seen a huge 30. The USDA says 30 million tons. Most people seem to say 32 million ton harvest of wheat. It's La Nina brings rain to eastern Australia. It tends to, and it's still wet there now, and they're going to be planting in Australia in a couple of months. They also it starts on Anzac Day, don't they? The sowing season there, so that's it's looking good for the initial signs down there.
Mm-hmm. Okay, so if I'm a company or somebody who buys quite a lot of these commodities, what would I need to be bearing in mind going forwards? Because it sounds like tough times if I'm a buyer, not so bad if I'm a seller. But maybe not so good buying. So what do I need to look out for, and what should I be bearing in mind?
Yeah, well, I'll start with the seller. In a sense, you say not tough time for a seller, but if I always think if prices are high, if you're making a profit, don't be shy about selling a bit. Being greedy can lead you into some bad places. It only takes one surprise. And we had last year, we had coronavirus. China may just say, if China has a spat with the US and says, okay, we're going to stop buying your corn now, and we've got lots of stocks, that's going to take quite a lot out of the market. For instance, these are things that could happen. Who knows what might happen? So I wouldn't be too sit on all your laurels if you're a buyer, but obviously keep some open. But you'd be a fool not to bank a little bit of profit while it's there. And if you're a seller, the first of all, the Brazilian soybean harvest is going to have a big impact on whether that turns out well or not. Earlier this week, I was hearing some talk of bad yields, but I wouldn't take that as too much gospel, because probably in a couple of days' time I'll hear good yields. It's harvest reports are notoriously easy to kind of try and manipulate markets with, should we say? So that's the soybean harvest is one thing, and the progress of the safrinha corn sowings thereafter, and how that goes on in Brazil. And then in kind of March time, we're going to open the US planting season in earnest, which is also a big obviously a big event, and which there tends to be a lot of information on. There's a big US planting report at the end of March, which is definitely worth looking out for, which kind of opens the curtains, as it were, although they've started already. And then there's another report at the end of June on how much farmers actually managed to plant, which kind of closes the curtains a bit. So that on that kind of theatre, that's also a key event to look out for. And perhaps less so the sowings harvest in Australia. It's important, but perhaps not as important as those two. And of course, any signs of winter kill in the wheat market, any signs of winter kill for the winter crops coming out of winter in Europe and Russia and the US, which in all of those geographies, there's a bit of cold weather around, which has raised more concerns than there has been for the last couple of months. Not that they're mega concerns, but the trouble with winter kill, you never really know until April, say, as to how severe it's been.
Okay, so really keep an eye on what's happening globally and on the markets. And I think after the last sort of about 12 months ago, really just, I think, be prepared for anything, I think, seems to be the...
Well, exactly. Yeah, exactly. Try it. Yeah, exactly. Do what you can. But I wouldn't expect prices to come down too much at the moment, because of the risk premium will still have to be in for a while yet, because of US spring sowings. And the Brazilian, safrinha corn question, and then soybean harvest question. So I wouldn't think prices are going to pull back. And if those turn out bad, we could be going higher again than even where we reached early this week. Okay,
brilliant, Mike. That's been a fantastic roundup. And just to add that I know that one of your analyst colleagues, Gary Mead, is doing there's an upcoming agri-money report, I think, that he is doing along with Yoki, who is our senior analyst at Feedinfo, looking specifically at what's happening in China at the moment, which is an interesting topic, and that will be available to Feedinfo and AgriMoney subscribers. So please do get in touch with us if you'd like access to these sites and these reports. But Mike, thank you very much for your time. I hope you've enjoyed talking us through what's happening. Lots of interesting things happening. And I hope that the audience who've joined us online have enjoyed it too. And thank you for joining us. I hope you can all join us tomorrow for our discussion about what's happening in China. And have a great day. Thank you.
Thank you.